Good evening and welcome to the Trading the Tech Show. My name is Derek with iLi Academy. Today is November 12th, 2020, and it's Thursday, so I can't believe that it's that quick. It seems like we just did our first show yesterday for the week. But we're here. So we're going to take a look at the charts tonight. We did get a lot of movement charts today, more so than we got, I think, yesterday. Some definite movement going on and some definite opportunities that are out there as I was browsing through the charts. So we're going to see what happens here. We're going to see what goes on. The Dow Jones today was down some points today. I'm going to go ahead and take a look and see where we ended up for the day. Just one moment here. I'll pull that up. Definitely was an off day though. So we're down 317 points. We're down to 29080.17. So we had a little bit of a bump at the end of the day going into 4 o'clock, but for most of the day after about 12 o'clock or so, for most of the afternoon, we definitely just were off the mark today. And I guess that's to be expected. We did have a big start to the week, and then ever since that, the big start from Monday, it's just kind of faded on us. It was like Monday, Tuesday, and then we started to fade just a little bit. So that has affected our market as well. We decoupled a little bit, I think, from the Dow. When we're seeing trading in the currencies. In the dollar, we've seen some dollar strength actually. We had seen some dollar strength even at a point in time where our market, the Dow, was rising, and after the Dow started to turn down, we still got more dollar rising. So we'll have to wait and see whether the correlation is still going to be there. The negative correlation anyway between the market, the Dow Jones, and the dollar will still remain. I doubt that it would necessarily just decouple itself that way, or the correlation would just stop working. But every once in a while, it'll kind of decouple, and it won't exactly make sense for what we've been seeing as a pattern, but that's okay. We just kind of continue on with what we're doing. We just don't maybe put as much weight on it in our decision making. And we just kind of wait for things to kind of just normalize a little bit. This week obviously is just not really a normal week for us. We got a brand new president elect, in the mix, and we had the news for the vaccine that's being developed as well. That's a lot of different news that we typically don't have throughout the week. So kind of geopolitical stuff that's occurring in the market that's not exactly normal. So there will be times when that kind of happens. You have these different anomalies that are kind of happening in the market, or these events that may be happening in the market that kind of skew things just a little bit for a little while. And we just kind of work through that, and then they kind of go back to what they normally were. That's just part of the experience. So it's good for those of you who are trading and who have gone through this time. You don't have to wait another 4 years or another 3 or 4 years before you get to go through an election as a forex trader. You actually have that experience now, and having been through it, and see what kind of reaction comes out of that. Now let's go ahead and look at our charts really quick. We're going to go through and analyze our charts and just see what kind of opportunities lie ahead of us right now. I've already got our Aussie CAD pulled up here on our 30-minute chart. We are above our 720. We see our 720 kind of peeking out on the bottom of the screen here. There's a lot of distance between the 720 and the 200. So we are buyers of Aussie CAD. That's what we're looking for. Right now, we have pulled back. We've almost pulled back to the 200 right around the break of today's trading day. But then we rebounded right back to the 100, the 50, and past each of those. Right now we're trading down right now right around the 100. So if we're going to place an order here, I'd place it either on my 50, or I'd wait till the rate drops below the 100 and then place it on the 50. Just depends on how conservative you want to be, or place it on the 100 moving average for a buy going forward. So we're buyers of the Aussie CAD. Aussie yen, we have a nice pullback going here. We're still above our 720. We've pulled back off of the highs. So our orders would go here maybe on our 200. Could actually use the 21 as well as a place, but maybe we can use our 200, our 50, or our 100 moving average as the places where we would want to buy. So we can place our pending order here just by right clicking, going here to trading, and then from trading, we'll go to buy stop. And so the 200 would be sitting right there about that 76 to 22 area. So that's where we would buy. As far as the Aussie New Zealand, it's going the other way. Aussie New Zealand tends to trade the opposite of the other Aussie pairs. So we'll see that from time to time. But this Aussie New Zealand is trading well below our 720. We've got a lot of space here between the 720 and the 200 moving average. We've got moving averages in order basically to the downside. Looks like the 21 and the 8 are moving up now above the 50. They've moved up above the 50. The rate now is up here, almost touching 100. So if I'm shorting here, I'm going to short here on my 50 moving average, which is sitting here. Let's see if it's going to pop up right around the, let's see, it did pop up. Yeah, sitting around 105.76 or so would be the area where we would short. Now, if this jumps up past the 100, then we can improve that order to the 100 moving average. As far as the Aussie US, we are still above our 720. So you can see here's our 720 down here, but if we widen the chart, we may not see it, right? So we pulled down here quite a bit past our 200. So we can place our order either on this 50, the 200, or the 100 here. Those are where our buy orders would be. So if we get ahead of steam back the opposite direction, then we will, and we continue north, we'll get picked up in those orders and then be taken up and maybe test our highs again. So that's what we would be definitely looking to do here to see if we resume this trend. As far as the CAD yen, rate just dropped below our 720 moving average. We've got a nice pullback going though. Our 200, our 100, and our 50 are up in this area. We're well above our 720. So if I'm, placing an order here, I drop my order on the 50, maybe on the 50 or this, the 200 here is in orange or the yellow 100. I drop my order on one of those to buy because the rate would have to get back on the other side of the 720, on the top side of the 720. All of the moving averages are also on the top side of above the 720 as well. So, there's more potential for the rate to jump back over the 720 than it is to stay below. But it's a nice, decent pullback that's going on now. We can place a really conservative order here on one of our moving averages and just allow that to sit and see what happens. If it does not go back that way and it actually comes down below the 720 and tests the 720 as a resistance point, then we can delete that pending order. As far as the Swiss yen, right now we're trading below our 720. Our moving averages have not really jumped all the way down in order just yet. And they're very, very close together. We want to see this kind of really widen out for us before we actually, commit to a short trade, because right now the 50, the 100, and the 200 are still above the 720. So we don't want to be placing an order to short on those because the rate would have to go above the 720, and that would make us, buyers of the pair. So right now we're going to sit on that one. There's not much happening there. As far as the Euro Aussie, we have our 720 up here on the top. So there's a lot of distance between that 720 and the 200. You can see where this trend to the downside really widened out for us here. And now we've got a nice pullback, right? We've had this nice trend down, but now we're pulling back against the trend. The rate is coming up here. It may or may not test that 720, but our entry orders would be on one of these moving averages, the 50, the 200, or the 100 here for a short trade. So this would really have to commit to moving down to put us in those orders. Now, if it takes a little while for it to come back and it maybe doesn't cross this 720, then as these moving averages move around, we can improve our order based on the moving average by moving up with the moving average. Now, all of the moving averages are below the 720, so that's why we have our penchant to the downside, or our idea is that momentum would be to the downside. Even though we're getting this strong pullback, we know that we're trading underneath the 720. So all this is doing is really improving the price that we can get in at to short. As far as the Euro CAD has actually jumped over our 720, jumped over in yesterday's trading session. It's traded well above that, hasn't really come back and tested the 720 yet. All the moving averages are getting in order. They're in order to the upside. However, they're not quite all over the 720 yet. So we don't have a mature trend, but we do have a full trend to the upside. So if we're getting pullbacks, we'd have to pull back below our 50. But I wouldn't really be too confident in that because the 50 just jumped over the 720. There's not going to be a lot of room for the rate to pull back here before it would hit the 720 and go lower. So I would have to wait for this to develop a little bit. I'd like to see at least my 100 jump over the 720 before I become a buyer. And that way the 50 will have more room. If we fall below the 50, we'll have more room to place our buy on the 50. As far as the Euro Swiss, we're trading above our 720. Right now, we're getting a little bit of a pullback here to the 100, but the 50 is in the 21, the 8. They're all kind of piled on right here in the same area. So it's not really enough space for us to really place our buy order. Right now, I'd kind of let this drop down a little bit lower than our 100. If the rate pops below our 100 here, then I drop my order here on the 50 for a buy trade to the upside. Euro pound is sitting directly on our 720 right now. It's just chilling right there. We've got the moving averages starting to get in order to the upside, but the rate is directly on the 720. All the moving averages are underneath the 720. So our idea here is that we would short on one of these moving averages, our 50, our 200, or our 100. These are the places where we would short. As far as the Euro Yen, we are trading above our 720. So rates above the 720. The rate has actually traded down below our 200 moving average. So we can place our order to buy, say on this 21, or maybe on this area where the 50 and the 100 are converging right now. That would be our entry order level right there. Euro New Zealand, we've got a nice pullback there past our 200. So like I said, we've got a number of trades that have actually pulled back, even to the 200 at this point in time. So there's definitely some momentum there, but but they're pulling back against trend. So our idea is that they're just improving the price for us and allowing us to get in at a higher level. So when the momentum does come back, we've got some room to the downside. So we're looking at the Euro New Zealand right now. Rate is below the 720. But it's above our 200. And so we would short here based on that. You can do that on the 200. We can put it on our 100 or on our 50 or a little bit lower here, or even our 21, because our 21 is a little bit lower than our 200. So we just got to know exactly why we got into the trade. We just want to pick one of those moving averages. However conservative we want to be would be the one furthest from, the further we get away from the rate, then the more conservative we're being. It has to travel more to get into our order. So, or to put us into that order. So we can pick one of those, but just note why you're doing that. So later on, you'll be able to walk through it and say, okay, this is why I got into my trade. Euro US, we've got our rate above the 720. We're getting a little bit of a red candle here that's kind of pulling back, but it's not past our 100, our 50, or our 200 yet. So we're going to wait on this. We're not going to trade that until we get a pullback beyond those moving averages. Pound Aussie, we're trading a rate below our 720. Right now it's above our 200. So our 100's here, our 50 is here as well. So, if we want to place an order here on this 50 at 181.35 for a short, that would be where I would place my order. And, if it takes us into that, there's a lot of room to this previous low back here on the 9th. There's a lot of room to that. And there's not a lot in between, rate wise, that's going to stop us. We had a low here where we might check that low, but beyond that, there's a lot of real estate there. Okay. All right, that was our Pound Aussie. Our Pound CAD. Pound CAD is the opposite direction, right? So we're trading above our 720. Um, we actually did trade down today below the 200 here. You can see where we traded below the 200. So placing our order on the 200 or on the 100 may have paid us out. And so right now that was the opportunity that we had. Looks like the 21 is trying to change now, trying to turn up, maybe go, maybe cross over that 100 and that 50. We'll see what occurs there. But that move has already kind of happened for us. Pound Swiss, we're trading above the 720, but we've got this nice pullback past our 200, past our 100 and our 50 here. So we can place our our orders to buy on any one of these moving averages. Okay. Pound Yen, we're trading above our 720. Same thing. We've pulled back very hard here. So our order to buy will be here on the 200 where the 250 are converging, or on this 100 as a more conservative entry. We could even use this 21 if we want to be a little more aggressive with the trade. It's closer to the rate, but it's still far enough away where we can probably place that order and feel safe about where it is. As far as the pound US, right now, let's see where we are here. We're trading just above our 720. You can see that on the chart here. We've pulled back past our 200, right? So we can enter our orders to buy either on this 50, the 200, or the 100 here. These are entry levels here. We may be able to even use the 21 if you want to be a little more aggressive. As far as the New Zealand CAD, we're trading above our 720, right? We've got to pull back past the 50, but we're kind of hanging out here on this 100. So when we're looking at this, we see that the rate is right here between the 50 and the 100. So we want the we want the rate really probably to jump down here, at least touching the 100 before we go and enter our buy here on the 50. The 50 and the 20 are kind of sitting on top of each other right now. But if the rate comes down here, maybe touches the 100, then I'd be interested in buying here, maybe on our 50 or 21. As far as the New Zealand CAD, same thing. We're above our 720. We've got this nice pullback going here, kind of gradual pullback. It wasn't really sharp or anything, just kind of moseying down. Right now it's sitting right on our 200, which is here. So we can place our buy on the 21 or the 50 or the 100 here as well, right? At 50 and 100 sitting out here about 62.71. So that's about 30 pips from where we are right now. So 31 pips away. So that's going to give it really decent room to actually move before it puts us in the trade. So it's gathering that momentum and it's actually confirming kind of, hey, this is the direction I want to go in here. As far as the New Zealand yen, we have our 720 moving average here. So we're trading above the 720. The rate just crossed our 200. So we can drop our order to buy on the 200. Maybe our 21 here is maybe a little bit more conservative, or we can be ultra conservative and put it on our 50 or our 100 here, up around the 70 to 11 area. Those would be buys, right? So New Zealand US, same kind of thing. You can see our 720s down here, just kind of peeking out a little bit from the bottom here above our stochastic. And then the rate now is traded past our 200 moving average. So we can drop our order here on the 200, the 21, or just like our last one on the 50 or the 100. Okay. US dollar CAD. Now the rate for the US dollar CAD has jumped up above our 720. So now, we've got moving averages that are creating trend to the upside here. We've got a nice trend that's kind of developing to the upside. We don't have full trend yet because our moving averages are still below our 720, right? So all of these moving averages here are below the 720. So if you wanted to place a short order, because this is dollar, you can place an order on this 50 or on this 100 or on this 200 and make the rate like really commit towards moving back to the downside. So it's probably going to come down here, tested a little bit of the 720, and then it's bounced away from that. But I don't think the dollar is going to be strong as far as the monetary policy or anything. Right now, it's not a strong dollar policy. It's not where we are. So we've got weakness in the dollar. So at some point, this is going to end. It's going to exhaust itself and go back the other way. And so that's why we would place our orders here below our 720. Now, if you don't like that because the rate is above the 720, you can wait until the rate actually drops back below the 720, or you can wait until all the moving averages jump over the 720, and then you can be looking for your buy trades. That's really kind of how you want to play that particular, what you're comfortable with and what type of rule you want to add to the trading strategy. As far as the US dollar Swiss, we're trading above our 720. We're trading still above the 200 as well. So we haven't pulled back quite as much, even though we did pull back some. We didn't pull back quite as much. We did pull back yesterday to the 200 a couple of times, like here and here. And so our orders could have been placed to buy on our 100 or on our 50. And we've been placed in that order right now and just kind of waiting for the market to really kind of push to the upside for us. But it's dollar Swiss, so I'd be a little bit cautious there. US dollar yen, we see that we're trading above our 720. We've traded below the 200. So we can buy on the 200. Our 21 is here. And then our 50 and our 100, looking like a bunch of the other charts that we saw for like the New Zealand's, it kind of looks like the same thing, right? Kind of the same setup. So we'd be looking to buy at those levels. Now, if it continues to come down past our 720, then maybe, we wait for the moving averages to kind of set up for that trade to the downside. But right now, our penchant or our thought process is that if it resumes trend, then the momentum will be with trend, which is to the upside at this point. So we'll have to keep an eye on that. It's a yen pair, but at the same time, it's dollar based. So, for me, that's conflicting a little bit with what I'm thinking about on the fundamental side, which is that we've got dollar weakness. So my anticipation is that we go back to dollar weakness. So I'm not really looking for a buy trade in the dollar for personally myself. Now, if you're just going strictly off the technicals, you can trade it the way the technical strategy is written. But if you have the fundamental part and you're looking at fundamentals, then we add that in as kind of like a filter for some of the things that we would do, especially if we're trading manually. Now, trading auto traders, that's already just built in. It's just going to take the order according to the parameter, ignoring really the fundamentals because it's just a technical trading deal, right? So, it's going to be a little different philosophy. So, but there's multiple ways that you can trade the market. So I don't want, the last thing I want to tell anybody is like, okay, there's only one right way or one wrong way to actually do things, so there's a million ways that you can trade and make money, but it's just being consistent. And so that's what we're really teaching here is the consistency of what we do. Being able to be consistent, with the execution and having real understanding of why we're doing what we're doing. If you can explain exactly why you're doing it and you can see it really in the chart, it's visual for you, then you can be successful at what you're doing. The market only does three things. It only goes up, it only goes down, it only goes sideways. Those are the only three things it does. So we don't need to overcomplicate it with all of these exaggerated, strategies and things that people come up with. I don't know. It's just like it's like they're trying to invent it or something, like, it's just like mad scientists when they're, analyzing, the charts. It's not that difficult just to understand that it does those three things, up, down, or sideways. That's pretty much what it does. We don't have to get down to the candle level and say, oh, okay, is this an engulfing candle, or is this three black stars or whatever? I don't know, just all these different candlesticks or whatever, the formations and all that stuff people get into. And to me, it's all nonsense. I haven't ever seen it where it's worked for anybody consistently. It's just nonsense, but for somebody, it apparently works. But for me, I don't think it has to be that difficult. I think we do the simplest analysis, and it still will yield us pips, like it's going to yield the person who's, doing some complex thing that's hard to understand and hard to explain. So, that's what we're here for, just to show you ideas, go through the charts. You see how quickly we're able to go through all of our charts. We're in about 24 minutes right now. We've been through all the charts and done our analysis already. We don't have to spend all day looking at the charts. You don't have to spend all day analyzing. It's not that difficult to do. We're just following the steps and seeing what opportunities exist. We place the order according to the opportunity and just trust what it does. And then we clean up our charts. If we've got trades that are sitting out there that were pending and we didn't take any orders, then we go back and clean it up. We just delete those trades and we place the next one when the opportunity comes about. We're not going to get every single one. We're not going to win every single one, but we're going to win more than we lose, because trend is pretty much our friend. All right. So this is the end of the week. Obviously it's Thursday, so there won't be a show tomorrow because there's no market tomorrow night. But we will be back here for sure on Sunday to get your idea, to get the ideas of what's going on in the market and what kind of direction to expect maybe for the week. So I hope everybody's trading goes well tonight into tomorrow. Hope everybody can be profitable, and you're closing out some nice trades. All right. Well, thank you for attending our show. Feel free to come to the daily market overview show in a few hours in the morning. That's going to be at 5 a.m. Eastern time. Feel free to check that out. We do post that pretty much right away after we finish. And we'll get it posted for you. If you're not able to get up that early in the morning, then you're able to, if you're able to see it around 7 o'clock, 8 o'clock, it's good, because you'll see it before the market open and you'll get an idea what's happening. And then you'll be able to look at your futures and all that, kind of find out what the Dow's doing, and then make decisions about what types of trades you're going to be taking. If you have any questions, feel free to contact me. I'm here even on the weekends. You can still contact me. If you have my WhatsApp, you can send it through WhatsApp, or you can email me or contact us through the Contact Us page on the website. All right. Once again, my name is Derek. This is iLi Academy. Thank you for your time tonight, and we'll see you soon. Bye-bye.